Carl, my friend, welcome to the program. Let's start with your message and your disagreement, I would say, with Elon Musk. Elon Musk making the point that Besson is business as usual. We know Besson, you know Besson. Carl, why is he wrong?
You know, Elon, I'm not sure if Elon had ever spoken to Bessent before he made that comment. And I think it's important to understand who Scott Bessent is. Scott, was the chief investment officer for the Soros organization for a long period of time. And I know for some people that sounds like a negative if you're talking partisan politics. But I think it's important to note that global central bankers around the world have respect for Bessent and his views. Scott looks at the world, with a 4D chess overlay, meaning he understands geopolitics, he understands people, he understands exactly what investment flows and economic flows matter and don't matter. So when you get into talking about tariffs, you get into talking about the bond markets, which we've had a pretty steep rise in our 10-year rate just in the last couple of months, almost 100 basis points. I think that's a worrying sign. And I think you need someone in this seat that understands geopolitics. We have a ground war in Europe. We have Israel, Iran. We're about to have China, Taiwan. And if you've got someone like Scott in there with that global expertise, who has been an investor in global macro events all around the world for decades, I look at the list of potential nominees, and the person that is correct for the United States of America, correct for the Trump organization, is Scott Bessent.
Kyle, you said that Elon Musk and Scott Bessent you don't think spoke before that tweet. Sources have told me they did have a conversation after this spat has played out on Twitter, with Elon Musk responding to your tweet. But how much is this about tariffs, about the fact that maybe Scott Bessent will be a little bit more judicious when it comes to tariffs? And I'm hearing, and reported last night, that they're even considering someone like Peter Navarro, a trade skeptic, tariff lover, to put at the top role in the West Wing at NEC.
I mean, look, I'm sorry for smiling, but I think look, the tariffs that got put in the first place, the 232s and 301s, if you remember, the Biden administration campaigned on the fact that they were going to immediately remove those tariffs. And Emery, notice they're still in place. When you have state actors acting non-economically like China does, if they want to put our steel business out of business, they can export steel and dump it into our marketplace and take capacity utilization below our break-even point, and they can bankrupt an entire business. So when you're looking at this, forget it for a second with an economic lens. Forget about growing the economy. There are two jobs here. One is to protect the national security of our country. The other is to grow the economy the best you can while protecting our national security. So when you look at the tariffs that were put into place, those were not broad brush, we're going to show China that we're strong and they're weak. This was us protecting our steel and aluminum businesses very specifically from the threat of the Chinese government putting us out of business. So we know that we have global supply chain deficiencies. We know that all the synthetic graphite is made in China. We know that all the industrial abrasives are made in China. We know that our APIs for our antibiotics are made in China. We have to unwind that dependency there, and we have to start thinking with a national security lens. And I think when you look at the candidates here, some are domestic folks that have focused on domestic policy for a long time, or domestic business. Others, there's really only one. Scott Bessent is the one who understands the way global trade flows work, and he also understands national security.
Well, let's talk about some of the other names as well. New York Times has followed some of the reporting me, Josh Green, Saleha Mohsin have done regarding the expanded list. There's Kevin Warsh, there's Apollo's Mark Rowan, there's also Senator Hagerty, and there's Robert Lighthizer. What do you make of those other names? I think a lot of people would push back that Mark Rowan doesn't understand how global financial markets work.
Yeah, I wouldn't make that comment. I would just say that, to become Treasury Secretary, you have to divest your holdings. I think Mark Rowan's divestiture would be pretty difficult. I don't know Mark, but I have friends that know him and think very highly of him. Lighthizer has been an amazing U.S. trade rep in the past. He is, and I've read a lot of his testimony when he testifies before Congress and the Senate. He is a very thoughtful person, and he's the architect of the 301 and 232 tariffs under the last Trump organization, but is someone that focuses only on tariffs, the right person for the single most important financial job other than the Fed? president in the United States? I doubt it. I look at all of these other candidates, and again, Scott rises to the top no matter who we're talking about so far.
Kyle, whether it's on X or whether it's right now, you really are backing this individual, Scott Bessent. So we have to ask, how much is this maybe a personal preference to your market positions?
Oh, I mean, I only have one market position in the public markets. I've been short the Hong Kong dollar since 2017. You know, that just doesn't matter. And I say that meaning China. Xi Jinping has told you since 2017 that he's going to take Taiwan by force if necessary. When that happens, I think you see global linkages break. So that's not up to whichever candidates in our Treasury. That's up to Xi Jinping himself. So my market positions have no impact on who I'm pushing.
It raises a question, though, Kyle, of whether we understand the market read-through from one of these candidates and whether the market response will actually be a check on who gets selected to be Treasury Secretary. Do you believe that President-elect Donald Trump would like somebody who would be good for market, or at least for markets to keep going up?
Yeah, of course. I mean, you know, what I'm talking about is who's best to grow our economy and also to protect our economy from state actors that say have malign intentions. And so you have to think about people that have that kind of experience, the kind of experience to understand who the malign actors are and who the good actors are, but also how do you grow, given the cards you're dealt, how do you grow your economy? The U.S. has become a regulatory superpower. The Trump organization's first moves are going to be reappoint heads of key agencies across the board. And I think you're going to see the animal spirits unleashed from the, let's say, the penalty box that they've been put in, basically by Lena Khan's FTC, and we're going to go back to old antitrust law, real antitrust law. We're going to go back to business combinations. We're going to go back to U.S. Entrepreneurship, and we're going to see the economy really grow in a place that we've seen hamstrung by the prior administration. So, yes, Trump wants someone in there that's going to continue to move stocks higher. Yes, Trump wants someone in there to focus on the worrying trends in the bond market. You know, we are still running north of $1 trillion deficits if you look at the CBO estimates, and we're going to run, you know, I don't know what the number is, $1.4 trillion, $1.5 trillion this year, maybe more. And so we've got a lot of bonds to sell going forward. And you've got China's economy circling the drain. All you see in China is stimulus, stimulus. And if you remember the beginning of stimulus, you're just filling a hole. The Chinese banking system is at least $2 trillion in the hole. So their stimulus has done nothing but, you know, stabilize their market with regard to investors' sentiment, but you haven't seen any real stimulus there yet. So it's going to be difficult. We're not going to see inflows from China into the U.S. stock market. We're not going to see a lot of inflows from Japan because Japan has its own problems. And we've got a lot of bonds to sell. So who we put in as Treasury Secretary is going to be vital to the stock markets, the bond markets, and our prosperity. And again, I believe there's one candidate that understands all of that. And yes, I've known him for a long time. Yeah. And it's why my confidence is so high in his ability to operate in this current environment.
Kyle, let's just finish where we started. That original tweet of yours over the weekend implied that you believe the uncertainty around this pick now is starting to have an impact on financial markets. Where do you see that playing out more acutely?
Yeah, I mean, look at the bond market. Look at the worrying trend in the 10-year. The 10-year is almost up 100 basis points. When Trump got elected, the animal spirits in the markets took off. We all saw what happened in equities and credit and even in cryptocurrencies. And now you've seen that tempered because now the markets don't have a great handle on who's going to be Treasury Secretary. Nothing's monocausal, but the markets were discounting a Scott Bessent win, and now these other names are kind of elbowing their way in to a potential nomination, and that's what's giving the markets pause. So I think the markets were discounting Scott's position, and now the markets are pulling back, wondering who else might be put in the position.